Hi everyone, in this video I'm going to do a breakdown of some Forex pairs, EURUSD GBPUSD, EURJPY, and maybe gold as well, see how long we've got. Try and get this done in 10 minutes, so let's go. Remember, if you starting with the USD pairs, always look at DXY. So starting the weekly, you should know by now how to do your analysis, but if you don't, I'm going to start again from here. So starting the weekly time frame, each candle represents one week of price action. We want to mark your supply and demand levels, also known as support and resistance. So here's support, here's resistance. When it comes to this level, we expect to reject it and go down. When it comes here, we expect to reject it and go up. It's close to the weekly. It's potentially making a double bottom formation. So from here, we expect it to reverse from here and go up. That's a weekly. You then go to a daily time frame. You want to trap the price between two levels once again. So we repeat the process, and you want to mark, because it's a downtrend, you want to mark every lower high and lower low. So get the rectangle tool out. You can see there's a lower high here. Mark that. Have it any color you want. I like mine in red. You've got another lower high here, and then you've got the current lower low where it was. So you could have it here, we could have where it was here. So the daily support also falls on the weekly support. So you know when price is at this level, it's gonna go up, and then it could come back down, or it could breach it, use resistance as support, go up, and then again use resistance as support, go up as so. So that's how price moves in between the levels on a daily time frame. And also when you're looking at a daily time frame, you look at the previous day's candlestick to give you a perspective of what's happening for today. So for example, yesterday was Monday the 9th of June. You can see you've got a bearish candlestick here. So today, if momentum continues to follow with that, it'll go down and then before going up. So you can use that as well with your analysis. You then want to go on to a H4 time frame, and this is the one that you want to keep an eye on. So again, get the rectangle tool out. It's in a downtrend, so you want to mark your lower highs and lower lows. You've got a lower high here, which could also be, I'm just going to move it here because it's too close to there. For example, there's no point having a level here and there, it's too close. So you'll need one or the other. So I'll keep that one there, and I'll use this one as the other one. And these need to be different color. So again, have them any color you want. I like my H4 in yellow, just so I'm used to it. So now you know when price is here, it's going down. Price is here, it's going up. Price here, it's going down, as so. So remember, this is a dollar index. Dollar index is negatively correlated to the USD pairs. So for example, if from here price is going down, you know that the USD pairs will go up. So if it's going down here, then you know to take a buy trade on EURUSD and GBPUSD, which we will look into now. So that is your H4 levels. You'll need to go to H4 on your DXY dollar index. So now I've done my analysis, so I want to move to EURUSD. So remember, DXY is going down, so we expect EURUSD to go up. So we'll start on the weekly time frame and take it from there. So remember, weekly, get your support and resistance levels. Here's your support, here's your resistance. Go to a daily time frame. It's in an uptrend, so you want to mark your higher highs and high lows. Get the rectangle tool out here. You can clearly see there's a higher low formation here. There's another higher low formation here, and also you can see, if you want to, you can put a trend line as well if you want to. So you can clearly see it's an uptrend, as so. Nice. So now you've done that, if you look at the daily, remember, as I said, it gives you perspective of what's going on. You could put another level here, so I'll leave that there. If you want a resistance, you've got your daily here, so like that, right? So go to a H4 time frame, repeat the process once again. Get the rectangle tool out. It's in an uptrend, so you want to mark your higher highs and higher lows. So this is the most recent high low. You've got a high low here, you've got a low there, higher low, high high, higher low, high high, higher low. This is the most recent high low, so we'll use this one here. mark it in yellow, and then obviously you want that's your support, you want resistance, so there's your resistance. So remember, when prices at the H4 support, it'll go up to H4 resistance. When prices at H4 resistance, it'll go to H4 support, as so. So that's how we can take advantage. So now you know, remember, go to the DXY. DXY is a H4 resistance, indicating it's going to go down. This means EURUSD should have been a H4 support to go down, but it's not. It's at H4 resistance as well. So I assume this to continue to go up. DXY is going down, EURUSD should be going up from here. So I wouldn't sell because DXY is at support. So if you always look at trading, always look at the DXY. I would have took a sell trade otherwise, but remember, DXY takes precedence. Always look at this first. So we think it's going down, so EURUSD is likely to go up. So what we want to do is, this is your H4 level. You can just trade H4 if you want to. If you want to break it down further, you go to a H1 time frame. So whether you're at school or college or you're at work and you want to analyze the charts, you can monitor it every hour. You do this by going to a H1 time frame. So this is where each candlestick represents 1 hour of price action. You want to go here, you want to go to the Fibonacci tool. There you go. So this is today's price action. You can see these breakers here, so these split the days up. So this is Tuesday, this is Monday, as it says here below. Monday the 9th. So we want to look at this price action. So to mark the charts for today, you always look at yesterday's price action. So you get this Fibonacci tool out, which I've got here. You click it from the low of the day to the high of the day and drag it across. So this takes practice. So you need to analyze the charts and get comfortable. I can do it with my eyes closed, but it takes time to get these hours of practice. So that is your support on H1. We'll change out of blue, and also H4 H1 resistance, which is here. So now you've got your support and resistance. Get this tool out here. When price is here, we buy. When price is here, we sell. Currently price is here, we sell. But as I said, DXY on a H4 is very, very bearish. So I expect it to go down further. However, if you go to a H1 on the DXY, you can see that there's a support here. So it looks to be going up. So if you want to, or what I would do is, I'd literally take a trade right now. It is a risk, however, because DXY is not in your direction. Let's just say you want to enter a trade. Let's do a live entry right now. Rectangle tool, highlight this candlestick. That's a candlestick you're interested in. Remember, you can extend this Fibonacci tool. This is now your H1 resistance. You always need to take a trade when price is on the level or close to the level. Price is on the level. It's literally the candlestick that's rejected it. You can see price has made a higher high. Price changed from bullish bearish. Now you've highlighted this H1 candle. Go to an M15 or M5 time frame and enter any candlestick here. So let's just say I'm entering on this candlestick here. It's bearish. It's going down. I've highlighted it. Get this short position out. Stop loss just above. So let's just say stop loss is just above this lower high. So let's just say it's 6 pips, 7 pips risk to make 40 pips. So your risk to reward ratio is 1 to 5, 1 to 6. That's really good. So what we'll do is we'll enter this trade right now. This is your stop loss, 1.14736. This is your TP, 13903. So you can see the candlestick is still moving. Obviously you could reverse from here as well. However, I've got plenty of space if it does reverse, just to give it a bit of breathing space. I like to trade on M15 to be honest, but you can break it down further on M5. Anyone is fine. So let's enter this trade right now. So I'm risking 7 pips to win 40. So I'm risking £70 to win £400 if you're trading £1 a pip. So that is your pip volume. And obviously if it's £10 a pip, you're risking £700 to win £4,000. It's easy as that. If you make 4 grand in one trade, that's like a month's salary. So in the UK. So let's enter this trade. Euro USD. Stop loss of 1.14 1.14393. 1.14393. TP is 13920. 13920. Sell. Enter. Easy as that. Next one, GBPUSD. So I've entered that trade. Let's see how it goes. I can monitor on M15. You can see I've entered on this candlestick here. Stop loss is above 7 pips here, 6.9. TP is 40. I could have got it here right on the level, but thought if it doesn't come close to it, it might come, you know, relatively close, and I'm fine with that. If I make 40 pips from this one trade, chilling. Next one, GBPUSD. Repeat the process once again. I'm going to go fast on this one because I know I'm over 10 minutes on this video. Let's go. Weekly support, weekly resistance. Go to the daily time frame. Price is in an uptrend. Mark your high lows. You got a high low on the daily here. Change it to red. I'm going fast here, so make sure you follow me. Here's your resistance. Also falls on a weekly resistance. Go to a H4 time frame. Repeat the process once again. You can see you've got a H4 resistance here where price changed from bullish to bearish. And also you've got your H4 support here as well. As so. Stretch that. Price is here, buy. Price is here, sell. Simple as that. Go to H1. Remember, this is today's price action. We'll look at the previous day's price action. Get the Fibonacci retracement tool out here. Get it from the previous day price action. High of the day to the low. Drag it down. These are your H1 levels before the market opened. However, I should be doing this at 8 o'clock in the morning, but I just haven't had time. You can see price breached it, went all the way. If you want to take a short trade, what time is this? 7 o'clock in the morning. Asian session, England, London session has opened. You could have sold on this candle, risking 12 pips to win 30. You can see it's gone all the way to minus 61. It's breached it and it's gone all the way to a H4 support. You see that? It's gone from one yellow zone to another. Look at this H4. It's gone from one H4 to another. So if you sold it here, let's see, H1. If you sold it here originally, 10 o'clock on Monday, and you're still in the trade, how many pips is that? Let's have a look. Let's say you enter here. How many pips is that? 100 pips. 100. 90 to 100 pips. So if you're trading £1 a pip, you made a grand. Trading £10 a pip, that's a £10,000 move. Just from holding that from 11 o'clock on Monday to 8 o'clock the following day. 24-hour trade. However, I do not swing trade. I'm in and out scalping. So realistically, if I entered here, which I should have done, I missed that trade yesterday. If I entered here, stop loss just above is quite a high stop loss. 15 pip stop loss. TP of 40 pips. So I could have made £400 if you trade £1 a pip, or £4,000 if you trade £10 a pip. Or if you held it, could have made £800 or £8,000. If you held it all the way to this H4 zone, could have made £1,100 or £11,000 if you trade £10 a pip. Easy as that. Now we will update these levels. You can see that is your H4 and H1. And you can see price has come all the way to the 61% Fibonacci. You could have entered it on a sell trade right now, but we've already got a sell trade going on the EURUSD, so there's no point entering on GBPUSD. You should only trade one or the other because the price action is the same. Look at this trade. I entered here in M15. It's going down. It's running in profit. You see that? Entered here. It's going down. It will expect to close 40 pips. So let's see how that goes. Last pair, because I know this video is approaching 15 minutes. Let's do EURJPY. Start on the weekly. Support, resistance, go to the daily, repeat the process. Very choppy price action. You can see it's in a range. Daily support, daily resistance. Go to the H4, repeat the process. Daily resistance. Daily support. Another daily support. Go to H1. Remember, today's price action, we look at yesterday's price action. Grab the Fibonacci tracement tool, get it from the low of the day to the high, which is here. And you can see this morning it went to minus 23 twice. Let's extend that further. Draw your H1 levels in blue. If you draw it in blue, you've got your H1 levels as so. So now price is at a H1 resistance. It's also a H4 resistance. It's also at a daily resistance. Price could potentially reverse from this level here. However, look at the daily candlesticks. It's bullish. So I want to take a trade right now. Even the H4 one is like a spinning doji. It hasn't closed yet, so I wouldn't enter a sell trade right now. However, I would monitor this trade. If you go to the H1 again, it's slowing down, sellers into the market. You can see it is potentially a hammerhead reversal or spinning doji. It might be neutral. We'll have to see. The next candlestick might close bearish. If it does, then we would enter a trade. So let's just say you want to enter a trade right now. You're impatient because it's at the level. It's kind of a neutral candlestick. It hasn't closed. It's got 8 minutes to go. Go to M5. You can see there is no real bearish momentum here. I would be comfortable getting into a trade once it has breached this level here. That is when I would take a trade, personally. Obviously, it's M15. That's M5. M15, look, it's rejected it here. It's rejected it here. This bearish candlestick, you could enter a sell trade right now. However, I would wait, to be honest. I want to see how this candlestick closes, and then from there, I would make my decision whether to sell or not. If I am selling, I'd get a short position here. And that would be my target. Risking 11 pips to win 65. Risking £110 to win £650. Or if you're trading £10 a pip, risking £1,000 to make £6,500. So if I look on M15 once again, yeah, I'm going to wait and see how it plays out before I enter a trade. However, if you do look at the RSI, it is close to 70. So remember, you can use these secondary indicators. It is at 70 and it's going down. It does indicate that it's potentially oversold, overbought. So I could enter a trade. But now I'm gonna wait and see. I'm gonna wait and see how it plays out. But anyway, I hope you enjoy this process. This is over 20 minutes now, and well, nearly 20 minutes. If you have any pairs that you want me to analyze, drop me a message, like, share, and subscribe. But before I do that, let's have a look and see what's happening with Euro USD. I'm still in profit. How much profit am I in? I'm in 8 pips profit. So that's £80 I've made right now in the space of 10 minutes. Or if you're trading £10 a pip, that could have been £800. But anyway, I'm trying to do this video every day. The course is coming. Make sure you like, share, and subscribe. Peace.